Hello, 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 hello. I'm just like, what's going on? Hey, everybody, give me a thumbs up if you can hear me. If you can hear me, give me a thumbs up, please. Just want to make sure that the audio works. Great. Bless. Bless, bless. All right. So, great. Um, so I think could probably hop straight into it, where we recap last week's market movements, go over some macro and micro data, and then we potentially push into new ideas into the next week, or continuing ideas into the next week. Let me get my foot massager going, and we're off. So, last week, what did we see? We had some pretty cool details come through. Let me try and take a look and see. Let's just start with the indexes, right? Okay. Let's start with the indexes. So right here so far, we got the S&P looking good. I will say it does look good indeed. Like basically, it's planned out. The play that we drew up has panned out, right? Because the S&P looks like triple Qs, as well. Similarly, right? We got extremely exhausted here. Came through all this selling pressure, AI bubble, AI bubble, AI bubble, which we've talked about now for weeks, right? I think I've been streaming long enough every Sunday to go through to have walked through this one as well, right? This being my 5th week streaming, and yeah, we definitely talked about it all throughout here. So I really think the more awesome part is, well, we were able to be able to vision, where the basing sat, right? Like using this as an example as to where buyers truly may step in, and that was awesome to see that. Cool. Now what is kind of the question, I think. Delete that. We've come up. We've stepped into PT1 from the lows. So we've seen about 2.5%. And then from that point, we've seen another 1.5% off the lows. And I think now the question really starts to become like, all right, we've had this pretty strong move down. We've had this relatively strong move back up. Is the pendulum going to continue to swing in that direction up? Or are we at another inflection point potentially where things start to change a little bit directionally? I think based on where we are in seasonality, we are in low volume territory, essentially meaning any market consensus that happens in this lower volume territory of we need to be lower or we need to be higher, it will do so in an exasperated time frame, right? Like if we see a good macro backdrop come in, maybe the Fed steps in and they're super dovish this week, because that's what's on the timetable for this week. We may look into that as all-time highs end of the year. Or if the Fed comes out and it ends up being super hawkish and what else? Maybe this whole Japanese debt scenario continues to surmount as that continues to become an existential risk right now to markets as a whole. And then that could be a potential point of vulnerability within markets. I think that's something super interesting as well, that not many people are actually like taking into account as risk, simply because it's undefined, right? Like I think there's so many times in markets that we are just oblivious to catastrophic risk, right? In the sense of like this can take this to absolute zero in some cases, or it could take this 50% lower. That a lot of times we're oblivious to it and we don't put it in our risk profile. It doesn't sit in our calculations. Also because like if it does happen, then none of it matters, right? None of this, what we're trying to do, matters in a way. So yeah, we do have the Fed meeting this week. I'm trying to remember when. Anybody know when that is? Is that maybe Wednesday? I wonder. Let me see if I could pull that up real quick. Wednesday. Okay, bet. Yeah. I figured that's Wednesday. Cool. So we got Monday and Tuesday price action. That's probably going to be like last minute positioning type thing. People trying to get positioned before the Fed comes out and before volatility continues to kick up. So I think that's going to be something super interesting. Let's see. So I'm gonna just read through some bits and pieces right here. Some market notes is a lot of bulls have lost money over the last few months, right? We saw that last week when I went through retail data. A lot of retail bulls, more specifically, have lost money in the last 2 months just because they were trying to bottom. And depending on how they went about expressing those bottoms, they probably lost a good decent amount of money. Overall, major indexes, they still look good, but along the shorter time frames, it kind of looks a little bit stretched, a little bit out of range, which was good to see this 2-day consolidation kind of thing where we had some volatility up here. Like, was it 2 days or it was like right here. We saw this little bit of consolidation before we took the breakout, and then we got rejected out that breakout. So we decided to consolidate a bit more. That was pretty good to see. At least some type of, consolidation or confirmation of price in some regard. If I went ahead and I took the same like major level focus, drew boom and expanded it out further, it makes perfect sense. While we came up to 627 and got rejected. I was even telling the gang, If we break 624, we see 627 very shortly. And that could be the trade. We tried it on, I think, the Thursday. Thursday, we tried it. It didn't really get there. We did get to our longer time frame, 625 PT, but not the break and then the push for real, for real. We got 625 and then immediately rejected. Then when the morning opened up, Friday morning, we broke 624 with strength and we ran to the 628, almost 629 at the highs within the first, I think 30 minutes or so. Before we got rejected and then the price started to get respected, right? So I do see a potential scenario where we do maybe do a little bit more sideways action leading into the Fed Wednesday before a decision is made. A lot of names in the home builder space have done pretty good, I believe. At least in the recent week or so, right? Off the lows, RKT came up off the lows and pushed into super highs or more local highs, what I should say. I think it's XHB is the home builders ETF. This guy's lagged dramatically. Home builders are still having some struggles. There's needs some type of catalyst here. We're kind of on trend line, right? In a way, roughly, but there's definitely something there bothering us, right? So try to look at that. So maybe let's take a look. Yeah, but the price action has just been wiping everything out. Exactly. If you played it early in the day, it was a great trade. But it got. If you were able to catch the break off it originally, off the momentum, and then potentially watch to see how the VIX reacted. Actually, let's see that real quick. Let's see how the VIX reacted off of the opening 30 minutes and then the following 30 minutes. So we basically lasted all the way until about 10, and then we saw a 10 a.m. slam. That's that good old Jane Street using the algos again to force liquidity and push prices lower. Usually around 10 a.m. Sometimes they delay it a little bit to 11 to keep it spicy, but hey, that's just the way things they are with their algos, and they run it like that. So if I were to maybe do that, and let's put it up next to the VIX. You could probably see what was going on. Friday. Okay, bet. So Friday from open on the 15. Friday from open on the 15 on Qs. First 15 minute, nice push. Obviously gapped up candle, 23 basis points, $1.50 basically. Push. We saw another 69, 70 basis points. Peaked by about 10:15 exactly, basically. The closure of that candle and the opening of this candle created that peak, 10:15. 10:15, what happened here? The VIX bottomed at that 10:15 candle. So at 10 to 10:15, we pushed higher. Immediately, follow ensuing candle, reverses, and then VIX continues to push up higher, right? Not in a super meaningful way. As you can see, the overall overarching trend is still negative vol, right? Still negative vol. But this push up of I was about to say it was not up half a basis point. Okay. This overall push up of this point and percent and a half can do a lot to confidence in the short term, especially as things come up. And that I find as really one of the main problems. So I think that was kind of it. I am not particularly sold on any particular direction going beyond now in this QQQ's landscape setup. I'm still a bull long term. You know what I mean? I'm still bullish, but I may be short termish bear right now. And I can't quite put my finger on exactly why, other than and when I say short term bear, I mean more so like by like we're gonna struggle to go up. That's what I mean more so. Right? Like we're gonna struggle to go up. Like we'll still go up, but we're going to go through a lot of pain and volatility to go up much further from here. That's more so what I mean when I say like I'm slightly a bear. Triple top on the daily and a few NNC's market. Yeah, I mean that could very well also just be the case, right? And markets already markets already priced in a Fed cut. So like this isn't news, right? A lot of these names have ran in advance of the Fed cut. I wouldn't be surprised if markets actually sold off a bit after the Fed does decide to cut. You know? Oh, are futures open? Yes, they are at 7. Okay. Everything is slightly green. I mean, red. Bitcoin back above 90,000 for as much as they can possibly do, which really isn't quite much of anything to be like ecstatic of, right? It's just 90K. The dollar is essentially flat. The dollar has, declined rather dramatically and has kind of just continued to be in this flat-ish range here. And we're a bit flat as well. Like I wouldn't be surprised if this point right here, this price point that we struggled to get over in ES and also in NASDAQ forms a resistance that maybe pushes us a bit lower before we get into a Santa rally correction type thing. Like watch this. Like I wouldn't be surprised if this happened. You feel me? Like, right? It's just like I don't think it's like all doom and gloom, right? But like I think we've washed out the bears. The bears are already off sides. Yeah, I mean, exactly. There's less liquidity in markets this time of year. The only other thing would be the Fed rate cut does push some liquidity in, right? Maybe that carries our sales into year end and we continue to push higher. But also like realistically though, too, right? We're talking about 1.5%. Like what's that? That's nothing. But that's a good move if you play it. Right? If you play it with options, if you play it with some decent size and some reasonably tactical strategies on strike and expiry, that's a good play. But in the grand scheme of things, a 1.5% move down on the NASDAQ is nothing. That's just regular degler daily business. You know what I mean? So yeah, I mean, I would say really just looking at if I were to form something for the downside, right? Like we've seen like a 50-point rally in 2 weeks. If I go back to Qs here real quick. Right? And this daily Friday's candle of that top wick kind of tells me something lightly. Like, yo, maybe we want to go a little lower. Like maybe I need to add another path here. Another path of probability. Right? Like I have this path here that's a bit more like generically constructed, right? But if this level holds true to be a bitch, then we could go lower. But I think it's really 627. So if I were to like drop another play within this swing play that I still have active, I'm trimming, it would be like, okay, back above the 627. That's where we potentially see like 630, 634 kind of movement. And that also, again, isn't even like that much. Like I feel like a lot of times when we're talking about like price movements, we're not asking for that much. Like we're asking for we're asking for 2.5 points, 2.8 points, basically 45 basis points, and then like what, an additional 80 basis points on that, 82, and we hit 2 PTs with reasonable expiry dates and strike price placements. Those are easily a trade that you can trim. You can enter 5 contracts, trim 2 at the 630, hold the remaining 3 to 634, 635, or vice versa. Trim 3, hold 2. Trim 3, hold 2, 2 weeks out contracts that bring home probably 30 to 40% returns on that one position with little downside, because you have duration on your side, so you're fighting less data as it occurs. You can get like end of the year contracts kind of thing, I guess, since we're still early December. Or in the converse space, right? You can probably, if we're actually gonna get a little bit bearish and a little weaker here, something at like maybe the 620 puts right here from the 625 close that we see. 620 puts 2-3 weeks out, with the very same 5 contract entry. Trim 3 at first PT, trim 2 at second PT, and enjoy your day and move on. Like we're not here trying to hit grand slams every single day in the market. They come, and when they come, we're generally ready for them. But I'm not expecting such insanely outsized moves like too aggressively as we come into year end, for real. So yeah. Maybe let's review some names we talked about last week. Some names we talked about last week were gold as per usual, and silver as per usual. Metals, we kind of just stood still in this one. Didn't do too much. We kind of danced around all our profit targets. We hit them all, right? We hit them all, but not before getting a managed risk here exit position set up. So that was a good trade all in all. I think that brought home like 160% to 140 after averaging out and kind of trimming. So yeah, so that was a pretty good play. We also have Caterpillar. I believe we spoke about Caterpillar last week. Correct me if I'm wrong. Caterpillar was a beautiful, beautiful setup, honestly. We got great consolidation here with the flag, the breakout, the retest of the breakout, and then we got big volume, big pusher that said, set it up, let's go. I really like this comeback to retest, especially because we didn't really break below the like the 635 range that I was really liking, right? Because that 635 range connects back to this pin candle here. We did see a rather crazy shakeout morning, right? Like this one, where I was already in the trade at this point, and we sold all the way down. I believe the news on that morning was that an executive was looking to, let's see if it's here. Yeah, Caterpillar CFO sold 10,000 shares, $5.7 million that he brought in, and really to absorb that level of selling, of selling off 5 or 10,000 shares of something, like that takes a lot on the stock, and we really severely needed buyers to step in to come help us out on that one, because that selling pressure was definitely brought price down in a major way. And then it seemed like it got right back to the level where buyers were ready to pull the trigger at 570. And lots of buyers stepped back in to help prop us up into new price discovery, all-time highs, I believe, at 560, 585, right? All-time highs, right? Yeah, all-time highs. Okay, good. All-time highs at 580. Let's go to 4 hours, see a little bit more in detail. 585, broke through 585. 600 came very quickly after. And then by Friday, we kissed 605, which was like the reach price target that I had set up to like trim the remaining little bits of shares contracts that I did have. So this one played out perfectly. Was able to remain still throughout this process. Grateful for this one as well. If I'm remembering correctly, I believe that trade brought in, I don't remember, 198% return using the December 5th and the December 12th 600 strike. Moments that the December 5th strike was like up 30-40%, and then the December 12th strike was somewhere closer to like 150% gain. And on average, I think it averaged out to like 170% profit trade on that one. All in all, some pretty good stuff that we saw in Caterpillar, where we effectively broke out this flag, grouped up again. We got the grouping, and then after the grouping, we went ahead and saw an expansion phase. That was pretty cool. I definitely took some unnecessary L's as well this week, and I want to go over those as well. I did some shopping, I think, that Thursday going into Friday, and I probably was just a bit too trigger happy, honestly. I was liking Hood. I mean, I kind of still do. I still like Hood. Like, it's a great company. I'm a user of their products, although I have my fair issues with the products itself. But as a business, as a money-making machine, emotions and caring aside, it's a real thing. And I do kind of still think that this that this potentially could pan out for the price. I got the 135 entry thinking, okay, strong breakout. We're doing good. Following morning, we opened way lower. Like way lower. Was not really like what? Right. Like it was like, wait, I was not expecting that to happen, like the Friday move. And then on top of that, when you think about it, everything else was doing really well that Friday morning. So like while triple Qs ran, right? This was the like what? Boom! Immediately at manager's care price. Like what happened? I was very confused with the price action at the gate on Hood. I just figured, yeah, I'm gonna just wrap this up right here, take the quick L, and reassess what's going on because, and maybe I'm wrong in something. Am I too early in something? Like what happened here? And then when you also look into the other sector, because they kind of play upon each other in like a pretty interesting way. XLF, the financial sector, it didn't do too great on Friday, but it also wasn't down 3%. You know what I mean? Like it just seemed a bit weird and awkward for it to be down 3% like such. Like so, like if we look at other financial companies like Citi, man, Citigroup has been on an absolute tear. Like look at this beautiful double bottom that I missed. Like boom, boom. Double bottom kicker. Second bottom higher than the first. Bam, bam, out of there. You know? And I drew it up too. That's the crazy. This is one of the craziest parts about the markets, bro. You draw it up and you come back to it 6 weeks later and you're like, oh. Come back to it 2 months later and you're like, damn. Well, it did it. It did it, right? Cool. I wasn't in it, but it did it. So yeah. So names like Citi, Goldman Sachs, like what beautiful price action in preparation for rates, right? Like 2% day on Friday, man, huge. BlackRock is still in the gutter, unfortunately, and I'm not really sure why. Sorry. Actually, I know why. Never mind. My fault. Blame Bitcoin. That's why BlackRock's in the gutter. Because Bitcoin is their top revenue asset. Out of all the assets that they've issued out ETFs for, the iShares, right? So BlackRock issues out these iShares trusts, silver, Ethereum, semiconductors, different country ETFs, all these positions, bond ETFs, all these positions, all the people that are buying into these companies, into the ETFs, that these products that they've made. Apparently, this one, iBit, is their highest revenue product that they've released, and because of that, you can see it in the stock price. So, if you ask me, a beta Bitcoin equity name that could be something interesting to play indirectly to Bitcoin, it will be BlackRock. BLK. BlackRock, for sure. And it will have some like external value that isn't directly to Bitcoin, right? Like they have tons of other products and they've been in the business way before, maybe not before Bitcoin was around. Actually, when was BlackRock founded? Because I think BlackRock is birth of Blackstone. But yeah, it was before Bitcoin. 1988. Larry Fink broke off from Steve Schwartzman at Blackstone Group. And that was like the spin-off of it to focus on like fixed income institutional asset management instead of other assets. So yeah, I mean, the financial sector has done pretty well. We'll probably go over a bit more of that when we talk macro data. But as you can see, sectors not doing too hot. Whoa, what is this? What type of this? Consumer discretionary? Oh, it had a split. Really? They did a split, a 2-to-1 split. Interesting. Okay, that's probably why something got weird with the consumer discretionaries with the candle there. I'm like, what? Okay. XOP, I tried to draw a torch on it. Torch did not like it. Consumer staples wasn't doing well. Obviously, it wouldn't do well in a scenario where equity risk on is still at case. But listen, the industrials are shaping up to be something pretty interesting. Like as a sector, over the year, it's done basically the equivalent to the S&P, 16% on the year. Excuse me. So we've seen some expansion there. That's pretty good overall, but I mean, it looks like it's ready to break out right alongside communication services. Real estate, again, like I mentioned before, continues to do nothing and go sideways, and that's why they need rates to drop down to actually stimulate real estate. It's just, yeah, it's kind of been a dead sector that's just appreciated in the assets, but not the equity assets, at least per se. Like to play the best, like almost like the best way to play real estate is not through equities. It's to actually own real estate. You know what I mean? Because even in instances when real estate as a whole is doing well, I find that real estate as a whole doing well more so means like fluid markets, I guess. Like, you know what I mean? Like people are able to buy and sell as easy as possible, and nothing really has come about from it. Like no real issues. But I'd rather just collect a rent statement on my, and go from there. But yeah, so another name that we talked about. Oh, this one's gonna hurt me to go over. Reddit. Man, Reddit did so good, and I was not ready for it. Like, I was ready for it. Let me not say that. I was ready for it, but I didn't have the mental fortitude to actually play it out like how I needed to play it out. I got caught up in it. I got caught up in a potential reversal. And yeah, it was just tough to hold. Like we got a good pop at the start of the week. I was like, oh, great, we're cooking with gas. Let's get to it. And then we died. And then we chopped around right here. And then on the Friday morning pop, it just popped right back into price target, right back on path. And realistically, I guess I shouldn't have sold when we had this weaker positioning here, but I thought of some other market opportunities and figured those were better, and just ended up being the case. I believe I traded where did I trade? Another thing that I didn't like as well was that I didn't see much flow. After seeing that first flow, I saw some specs come in. People trying to grab December 5th, 247.5 calls, like 20K here, 20K here. I didn't see a continuation of it. And that, along with me trying to say, like, hey, you didn't follow the rules, I chopped it. And I mean, it's going to be one of those scenarios where just have to, I guess, be in agreement with the plan, and the plan didn't allow for much space for me to sit in drawdown, basically, right? And does that mean that I should expand out the plan? Maybe not, or maybe figure out a way to get a little bit more familiar with this particular equity standard deviation and price. Maybe that could have saved me, right? Like, we are like that push down was like, if I were to potentially calculate that out and say, like, oh, that maybe that push down was like, oh, that's nothing. That's like less than a quarter of standard deviation, like on a daily basis, on a 2-hour basis, on whatever basis that there may be. I could just count it out as noise and maybe just say, well, it's noise. And then roughly what? I guess roughly 2 hours later, I would have been straight back above managed risk here line, you know? But I guess that opening really flushed me out. That opening drive to a 10 a.m. reversal. Oh my goodness. 10 a.m., man. 10 a.m. It's just something about it. Something about it. All right. What other names? Oh, ASTS ran like a madman out of nowhere on Thursday. I got a quick day trade in it. Didn't even get time to alert the community or anything. I just like bought at 63 and just sold at 70 and was like, cool, nice. I think that was like a 80% or a 75% with the same week expiry position. Getting the 65 strike or something like that. That was cool. I just know that when this name wants to run, it runs. And it being up 40-some% at the beginning of the day was something wild. Sorry, maybe not 40-some%, but like somewhere closer to 4% off rip. So yeah. So that was something cool to kind of look into. Do you guys currently have any questions right now? If not, let me know. But I'm gonna pull up some macro data here and just try to connect some dots at it. Nope, no questions. All right. So let's step into the review of FOMC. JP Morgan wrote up a piece on the North American Economic Research Group wrote up this piece. At the conclusion of next week's FOMC meeting, we expect that the committee will lower the target range of the Fed funds rate by 25 basis points to 3.75 to 3.5 to 3.75. We look for at least 2 dissents in favor of no action and 1 in favor of a larger cut. The interest rate forecast will also reflect unease about cutting, as we expect only a slim majority of the 19 committee participants will have penciled in the next week's cut as an appropriate action. As was the case in September, we think the median participant will pencil in 1 more cut in each of the next 2 years. Likewise, we don't see reason to look for large changes in economic forecasts. We look forward to forward guidance and the statement reference the extent and timing and adjustments. They're saying they're expecting Powell to stress that the policy rates are close to neutral. The time for risk management cuts is past, and that further cuts would only come if we see material deterioration in the labor market. That's kind of the part that I'm confused about. Because if we were to go look at what I'm looking at in the labor market, things don't look too hot. Right? Things don't look too hot, which is a bit weird for us to say that Powell's not really. So if I were to pull up this data point, this is the labor growth visualized as via ADP and the BLS data. So ADP does like private business labor reporting. And then the BLS is more like the Bureau of Labor Statistics, where they give data on unemployment claims and continuing claims and XYZ. So navy blue is ADP, light blue is BLS. You can't really see it because I'm blocking it here in the bottom of the stream. But I mean, this doesn't look good, right? Like, I will say this. This is job growth, right? This is like the hiring. Yeah, sorry. Yeah, that's what I was just saying. This is job growth, right? And effectively, this chart is just saying that job growth has deteriorated dramatically, and we seem to be sitting at some type of inflection point. Babe, turn on the heat. Turn lower the heat, babe. And I don't see how Powell doesn't see this as a deterioration in the job market. Although like job claims of unemployment and continuing claims has not maybe increased as much, but like, yes, we're technically at full unemployment, or at least that's my visualization of this, right? So job growth has deteriorated dramatically to the point now where ADP data is showing negative growth, right? And we're just at this cusp, right? But right, exactly, Dan. Wow. But that is insinuating that we're at full capacity, we're at full employment. All while we have full on major GDP producing companies announcing 30% cuts to entire divisions of their business. Meta being one of them, I believe that just happened this Friday, announced a 30%. Right. Well, that's the thing. I don't think unemployment is rising. It is, but it's ticking just barely. I believe the last unemployment reading that we got was 4.3 to 4.4, right? You know what I mean? Like, I think it's one of those things where it may happen all at once, right? Almost like how we had a shock to the system during COVID, where unemployment rates went from 1.5%, nothing crazy, 1.7% into 8% unemployment in like 2 weeks, you know? It may not be that exasperated as we don't have a black swan event like COVID potentially, like cross our fingers, right? But it may go from 4.4 and then the next reading it jumps to 5.1, like that type of thing as we converge, right? Exactly. The convergence of those data points cannot be good. But I will, and again, I feel like I have to preface this almost every single time I'm here now. I feel like in this administration, I've become more and more conspiracy theorist based and like thinking and leaning into it because it actually tends to be the most viable outcome. The government shutdown and the timing of the government shutdown and the blockage of this data to potentially delay necessary data points for us to be able to navigate the markets consistently or be able to navigate ourselves like in a smooth process, I feel leans into the fact that that the administration is trying to hide inflation, right? By smoothing out inflation and high tariff impact on inflation by smoothing it out, essentially, right? And then also hide this unemployment issue with the government's great and everything's happy, all-time high stock market, rada rada, AI is going to be here to save us. Don't worry about it, right? Like, and this also does kind of play into my bear case, right? Like Q1 2026 light bear. Like, I believe also I mentioned this as well, probably late last week, I think. I dropped so much data in here. Mm-hmm. Actually, let me try it this way. Sorry. Jobs. Boom. December 1st. Apparently, find job and new job terms reached a 20-year high on Google Trends, with unemployment reaching 4.4, highest since 2021. Right? It's 4.4% is not a super alarm, ring the bell number, like limit down, end of the world number, but it is getting higher and not slowing down. And this is kind of where, again, I'm concerned, right? So end of November, I mentioned another thing. Said, unemployment ticked up only 0.1. So 4.3 to 4.4 in the recent unemployment data. Even after some of the layoffs recently, I'm feeling they haven't filed for unemployment yet and they're living off their savings. And, because like some of these people that have been cut are coming from potentially like good high paying roles, and can live off of their severance for some time and can probably also live off some of the equity that they've been given for maybe the last several years, right? I believe companies like, I think Amazon announced the layoff that was real and material in a way. And more recently, Meta with their metaverse team. Like, I'm sure those individuals were paid handsomely for quite some time, and they can probably coast in the background for some time until they aren't able to find another role. And that really relies on the fact that they were paid well, right? And that they're maybe not able to find another role. And then if they can't find another role, we can start to see that data finally come in through unemployment, and go from there. So it's something I'm watching, something I'm taking care of, because honestly, if unemployment reaches to the point where it gets too high and people start questioning things, none of this bullish stuff that we're talking about right now will ever matter, because the VIX is going to reach new highs and the market's going to melt. It's like some of those in terms of our trades, right? In terms of our trades, it's going to be a good opportunity for us to get in on our investments, right? That's why we raise cash on the side, maybe sit back a little bit, kind of want to talk about some bits and pieces, but we have to strategically come to the realization that this is the current doom and gloom. This is the current scenario that we're facing, right? And again, it may not be a thing that pans out this week, next week, 2 months from now. Who knows? But it's something that we should all have at least some form of eyes and some form of knowledge on what's going on to so that if it does start to deteriorate and if we do start to see the super inklings that give us real detail and real real factors into play, that we know how to prepare for it and we know exactly what we're doing. We know how we're going to play it, right? Like we're going to come into it. We're going to probably lean into it with some slight duration puts to hedge some longs and kind of sit there, right? And this kind of leans directly into the fact that, we don't know where the bottom will be when we do sell off, but we may be able to catch a violent sell with some good positioned contracts that allows us to trim and potentially have some real monstrous gains in that way. So yeah, so that's kind of something that I want to at least keep in our mind, so that we can be ready for it all and for anything that comes our way. Another cool thing I guess we could kind of talk into is AI. I guess more AI stuff, right? Apparently this data set from JP Morgan talks about the cost of running AI has dramatically dropped. The shifting frontier on the AI model performance and the cost itself. We're looking at the cost efficiency frontier, the capability frontier, as well as the balance frontier, which I believe is the cost with the capability. So both, so like an average of the orange and the green one. We can see across several models here. So, and on the x-axis, we have the price per million tokens. And on the y-axis, we got the GPQA diamond score, which I think is the model efficiency score. Correct me if I'm wrong, but it's like when you guys remember when Marquez Brownlee used to come out and do like benchmark analysis on GPUs and CPUs on new computers and stuff. That's effectively what I think this GPQA diamond score is, which is basically like a benchmarking type score that is the benchmark for AI models to be able to say like, oh, this one's smarter than the other one, and oh, this one's more efficient than this one. Like, cool. Like, I'm sure these companies are hyper focused and overfitting for the performance on these benchmark tests. So I think this website right here, GPQA Diamond Score. Gemini right now is the bad boy in town, 90.8% benchmark. Ooh. Then we got Grok 4, GP2 GPT-5 Mini, and then we got Claude Opus. Claude Opus 4.5. So some pretty cool stuff. Surprised to see Qwen at this low. Is that even the latest one? Or is that like... I don't think that's right. But we'll see. We'll see. Whichever. You pick. Or both. Yeah, both. Okay. um, so yeah. So we're gonna look back at that piece where we talk about OpenAI, Anthropic, Google all try to compete with each other market wise. Yeah, for sure. For sure. They're the big boys in town, right? And they're the ones that are also the most used, I would say. Not many people are using DeepSeek, at least not in America. It's Chat GPT has very quietly become a verb, the way we Uber it. You know what I mean? Like, so GPT still does have market share and market control, I believe, for the time being. But I mean, they recently launched Code Red, and a lot of people are kind of focused on other models, really. I think the less technically inclined individuals that do use AI or some models are more frustrated with the fact that that like some models can be wrong and they don't quite know how to prompt properly to help it gain context and like reuse it and things like that nature. So they get a bit flustered and frustrated with it. And I think that leads to some churn. So, um, I mean, it is what it is, right? Cool. So, what else? This is another survey of evaluating streaming services because Netflix bought Warner Brothers. So, oops, sorry, too zoomed. So it looks like Netflix premium has dramatically increased, and that's before they put other things. I could definitely see Netflix going to $50 before 2030 for the premium version, and it started. And we're right back where we started, guys. Cable's back. It's just called Netflix instead. It only took 15 years, but here we are. So I'm just in the camp of I get free Netflix or free basic Netflix with ads or something like that from my phone provider, and I just live with the ads and move on. Because I'm not in that camp that's willing to spend $25 just to get the 4K version of Netflix. I'm not rich enough yet. So that's just how it is. I'd rather, and to be honest, I sit here at this desk way longer. I really don't even watch TV. I watch YouTube and interviews of Goldman Sachs and representatives and Jamie Dimon interviews and Stanley Druckenmiller and what these guys got to talk about on the latest New York Times beat, the Deal Book or whatever. So whatever. The only thing I do care about really when it comes to watching things is sports in like a major way. So if we could figure out how to put sports in a proper category so I can watch my Miami Heat and whatnot and be priced reasonable, I'm cool with it. But all the other shows and stuff, I very rarely want to watch a show like that heavily. So I'm not too mad about it. So another bit and piece of some macro data that we have here. Financial sector was among the most net bought sectors, led by a lot of long buys, right? As we can see in the XLF. Most subsectors that were net bought were led by banks, capital markets, and financial services. they outpaced net selling in insurance. We've seen some net selling in insurance. So that's something super interesting. The U.S. financial long-short ratio is now up, stands at 2.1, and it's up 3.2% week over week. Highest level since April 2023. What happens in April 2023? What happened back then? I wonder. Let me see. Let me see if I can figure it out. Oh, April 2023, we were basically exiting hyperinflation. So actually, if you ask me, April 2023 looked like bottom to me. Because look where we are now. Let me go to the weekly chart just to keep it. April 2023, guys. Right here. Bottom. Before we expanded 50, 60% in financials. And if you don't think the Fed unlocking this liquidity alongside ending quantitative tightening will free the reins for banks to make more and more and more and more money going forward, you're wrong. And I could very well see it in a scenario where, as I even have it drawn up here, the financial sector continues to expand. And we may damn near see 60 by next year. Year to date, we're at 10% on the year. Financial sector could very well be growing heavily here. So XLF, if we're talking banks, if I go into my spend narrative bank here, or my spend narrative watch list here, right? Oh my goodness. I was trading it earlier this year at 30, 40 bucks and it's sitting at 80 ball. Gee, sometimes I just think like, I got to play equities. Why am I playing options so much? Like, wow. Like it did great. We expanded out. We were traced back, expanded out, traced back. But like a whole move, like from sitting here from 33 to, oh my goodness, 134% on the equity. Just giving myself some duration here. Man, that's got to be at least, what, 700% if you got the 60 calls in December? 60 calls back in May, right? Like you got to have balls of steel to hold 60 calls all through this up, down, left, right, center. But sheesh. Lemonade, definitely one of the names out of insurance that I'm pretty sure is probably net bought, even though the financial sector was in the insurance was net sold. They're probably talking more so about the Aflacs of the world and such that really received some issues. But like I said, Goldman Sachs, Visa, JP Morgan's. I can't believe they're on here. Right? Like, look at this. This guy's primed, ready to go. 315. Talk about 340 soon. Like, actually, let's draw this up right now. To me, this is a torch. Got good pricing. Good price. We have expansion period, right? Let me make sure. Let me go back to the stream real quick. You guys can see it? Yeah? Okay, great. You can see it. Got an expansion period, met with top, okay, toes, wicks at the bottom, top, wick to the top, range defined, range defined, range defined. 30, 315, 318, 320 to 300, 295, 325. Range defined. Accumulation period. Accumulate. Let's get ready to buy more. Get ready. Yeah. They're going to cut rates. Expansion period. You see what I mean? So if you ask me, come through and I drop through some things, 4 lines. I put the entry, 320. Put the managed risk here. Maybe back at 310. Can I withstand 310? I don't know. Is 310 where I'm wrong? Like, do we get back? Yeah, we get back into range here, but like, this is also what I find interesting. Like this ending of these price right here, and also that right there. Yeah, 310 seems like a good. How much risk is that? Oh my goodness, 3%. That's kind of heavy. It's heavy. Okay, maybe I risk being wrong and put my entry to 318. And what is this risk at now? 2.5%. Okay, I think I could deal with 2.5%. Entry 318, PT1 325. How much is this? 2%? Not enough risk. Boy, this is basically 1-to-1 or like 1 to like 1 to 1.5 or 1.2. Let's see. My fault. Yeah, this is 0.8. So 1 to 1.2. I don't like that risk reward. Right? Like, could be a nice setup. I feel like you'd be wrong at 292 for a swing on the weekly level, but the drawdown on this is insane. Exactly. The drawdown on this would be insane. So, like, that's kind of the problem. Like, would we get an okay? So, like, ideally, do we get an entry down here? Probably not. But could we? That would be sick. Like, really, the entry point in this case was down here. That's yeah, weekly doesn't have us. We don't have an entry till April, so or since April. So I mean, shoot, that's the real winner right here. Just sitting here and just holding through this. That's the real way to do it. Shit. But okay, on the daily, it shows the last entry. Yeah, we did get some entries, 304 and I guess 311 on this one. So I don't know. But all right, let's see. This one's hard to play actually, because like I want to buy the top to push. That sounds insane. I want to buy the top. Crazy. No, don't listen to me. Okay. If we get a pullback, into 305, I'm game. You know what I mean? I'm super game. But if we also start running and the 318 breaks and we hit 320, I'm also game. You feel me? Like, maybe I need to do 2 entries on this one. I haven't done this before. So let's see what it looks like. Oops, wrong thing. Undo that. I'm going to duplicate this and put that there. 5 points on this is trouble. Like, I want to cry if I'm down 5 points in this one. What's that? It's like 1.5%. In options world, that's death. Ugh. Okay. What's your chart request? What's up? RDW and AMBA. Okay, shoot, I don't know any of these, but let's do it. Honestly, all I have to say, financials are a buy. Financials are long, and financials are definitely setting up. Visa, on the other hand, Visa may be the more appetizing buy as opposed to JP Morgan. Got a cool scalene triangle setting up here. Entry points, like entry points should be damn near, should have been Friday price. Like should have bought Friday, Pico bottom. You know what I mean? Maybe you get an entry at the 335 here. We put that right there. We put the managed risk at 325. Something like that. I don't know. And then we sit all through this 350 as a TP type B. You know what I mean? Into 360 as a PT, or even a baby TP. Like that's the problem too. Once you're like super early on this, TPing right here at 340 is like cutting your foot off and then trying to run into the war. Like TPing so early in the move, just because you got in mad early, is like crazy work. But that's 2.5% though. That's still a solid setup. You feel me? But it's just gonna be really difficult. And then a nice all-time highs, a 370. So you take it 10 points at a time and you try to hit and see what's up with it. That's how I think this could be played. But yeah. Okay, RDW. Let's see what this is about. Bottom. Bottom. I like it from the standpoint of like risk reward. Like if we're talking risk reward here, like the bottom is what, like $1.50? Says 6. It's been able to go to 25. So like if we just look from this point of view, it's like, how could I lose? So 3.5 risk reward, right? Like whether you could sit through the vol, I'm also pretty sure this company is probably news driven. Like this thing needs news to move. And then when the news piles in, it'll do these moves, parabola type stuff. You know? Aerospace and defense. Okay. Yeah, that makes sense. That tracks with you. You definitely be on the aerospace stuff. Yep. Manufacturer supplies space equipment, offers critical space solutions, reliability components, next generation space economy, with IP for solar power generation as well, in the space of 3D printing, manufacturing, solving. Companies founded in 2020. Well, I can tell you right now, financials aren't going to really probably drive this. So news is what's going to drive this. News of collaborations, of maybe government deals. Orbital data centers. Okay. Oh, we're talking about putting them into space. Oh, shit. Oh. No cooling needed. Yeah. 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 I mean, that would be lit. Again, all driven by news. Like, we would need David Sachs to come out and say, hey, ooh, ready for this? Ready for this? How about this? David Sachs, the AI and crypto czar of the Trump administration, comes out and says, hey, this is actually a requirement for us, and we are. Thank you, Greg. and we are looking forward to what if the U.S. government signs for compute, right? Like that's the bailout. They hide the bailout. Oh snap! Okay, I'm seeing the vision. They hide the governmental bailout. Remember that? Remember that we were talking. I don't know when this was, but like maybe like a month ago at this point, month and a half at this point, there was like, oh, Sam Altman's like, yeah, I need more spend, I need more money, like I need more rah 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 to be able to compete and be able to reach AGI and da da da, and then there was like a rumor of like them even looking into getting governmental funding and XYZ. Then David Sachs comes out and says, listen, this is not what's going to be the case. If they overspend or if they end up in a scenario where they're basically bankrupt and they can't meet their bills, they will be bankrupt and we will not bail them out, rada, rada, XYZ, right? What if they just bail them out by buying compute, right? Like, I don't think a company like NVIDIA needs to be bailed out, but some of these private companies like OpenAI, they're already looking to go to public markets anyways because they don't got no more money left to get private markets. And the structure doesn't allow for, like, they've already like exasperated that pool of people. So the way I may be viewing it, right, is a few dominoes of things that may happen could potentially be U.S. government signs $1 trillion, maybe like $1 trillion commitment over 10 years with NVIDIA, OpenAI, working alongside Palantir and RDW, right, to do this whole space product that does this, data center in space, as well as on a shorter term data center here in Virginia, because I mean, geographically, Virginia probably has the most data centers per square mile. That whole like Virginia Northeast section, like Tyson's Corner kind of vibe, into DC, into like the Pennsylvania, like Maryland, that whole section of like the US has the most data centers per square mile. And if the administration is looking for something like that, that could be a play for sure. I just find it very, very difficult to trade these types of things unless you approach it with I'm okay with it going to zero mindset, right? Because for all those things to happen and pan out and do these things, like it's a multi-cog requirement for you to possibly profit. Not saying that, right? You know what I mean? You need insider knowledge for this type of stuff. Like to know timing on certain things, to know like, oh, RDW. I mean, like you could probably pick up on like the fact that like, oh, like maybe you follow the CEO on their social and they just so happen to be a bit public with it, right? And they're on their social and they're like, yeah, I'm going to the White House, or you know what I mean? Or they're going to DC, or they had some convention in DC and they're set to meet with Trump soon. You know what I mean? Like when those type of news events come out, those are the type of things that I think you could use to leverage to say go, right? Or also another thing you could use to possibly do is, for sure, nice cup and handle on the weekly, right? Like it's a big cup and handle though, right? So like it's really just like, all right, when? To be honest, a name like this, I would only play equities. Like there's no way for me to time this properly. I'd probably just get shot in the knee with data. It's also only a $6 stock. So I mean, there may be some liquidity issues and options. I don't know. This is tough. Maybe I'll do an 80-20 equity to options type beat with a huge leap at like a $10 strike. That may be the way to play it. Give you a January 2027 $10 strike, putting 20% of the money that you're willing to go to zero there, and then another 80% of the money into equities, and probably run with it. So let me actually chart it though, right? So I do really like this price though. Like, look at this. It's obviously been a long-term price confirmation, right? We've seen this kick up. We've seen this kick up. And we've also seen what looks like it's going to be this kick up. Right? And on the last kick ups that we've seen 47% move. We've seen a 350% move. And I guess the average of that is probably what, 100%? So it may very well run 100%. $12.50, $12. Simply because this $6 price range seems to be bottom. Seems to be basing price agreement, right? Where it doesn't seem to get much lower than that, at least, right? I want to know why Bitcoin's price follow the NASDAQ 100. Because people buy Bitcoin with dollars, or interesting. I'll get to your question in just a moment. I'm going to finish up Dan's request on the other one. I do like RDW. Looks cool. I'm going to put it into my which basket? Space Tech. Let's put it in a Space Tech basket, and I will keep watch of it in the Space Tech basket and see what they got going on. And then the other one, we got, what else did you say? Where is it at? RDW and AMBA. Cool. Let's see. AMBA. American or no? Okay, that's not an American. Okay. Ambarella, semiconductor company. What they got going on? What they cooking? Ambarella engages in the development of low power system on the chip, so SoC semiconductors and software for edge artificial intelligence or AI applications. Its products include video security and advanced driver assistance. Oh, okay. Okay. You went to something. You found some underground security surveillance alpha, huh? Robotics and autonomous driving. Okay. Well, stock hasn't done much recently. We're seeing in price confirmation. Basically, the entire market has said that over multiple years, almost the 2 decades, the company is very rarely worth more than $70 a share. And when it is, it's usually worth $120 to $150 to $200 a share, or somewhere at about $39 to $40 a share. That's essentially where I believe I'm seeing. Let's load up their website, see what they're talking about. Right? Nice base. on a potential DJI ban. Oh, but what products do they sell though? DJI, like I would, I maybe wouldn't quite put them in the same category simply because DJI seems to be more consumer focused, unless I'm wrong. Like I do know DJI has other product offerings too, but I didn't think Amba. I mean, I didn't think DJI does like AI vision processing and stuff like that, like Omni Eye type stuff, like basically at least what the website looks like they're doing. Like, let me show you. Yeah, Cody, similar scenario, right? I think this needs some type of big news catalyst to get this guy moving. But as a good base, at 60, $70. Really good base. Right? So this is the website. They seem to be doing some more like governmental type things. Like, excuse me, I don't think, or at least maybe with their system on chip stuff. I don't really know. What are they selling? You know what I mean? Like, what are they selling? Are they selling this eye? Wait, is this a Chinese company? Why they got? Is this the ADR? Because that's a whole nother risk too. No, it's not an ADR. Okay. Yeah, I mean, could be something cool. Just don't quite know. I don't know if I have any potential value add to this. Maybe. Be something I probably keep in mind or keep a lookout for. To maybe see as we get more, more updates on this. Like this would be something cool, super cool, where it's like, oh, with all the new developments that we have in Waymo or in other developments that we have with Tesla and their maybe robotaxi. You know what I mean? Like maybe there's some mergers there, and huge growth. Other than that, it's probably an investment play, right? Like, what are they selling? You know what I mean? Like, that's what I'm trying to say. So, like, I'm trying to figure out what they're selling, so that way I can gauge the demand of what they're selling, right? Because, and then after engaging the demand and trying to understand what the demand of what they're selling, then maybe I can figure out what the market sentiment is towards the demand and then what they're selling. And then that will probably push me into either the camp of long bull run, long push into hires, right? But like maybe I need to see some more information to have a point of view on it. But chart wise, if we're just looking at the chart, looks good. Doesn't usually get lower than where it currently is, and if it does, it's you could jump ship before then, right? Like $70 into 40, that's a 40% downtrend. Like, that's a lot. You can definitely leave way well before you get into 40, right? But anyhow, some cool news comes out and their system on chip, maybe they're working with Rivian to do some cool stuff, right? Like, I just would need to see that come into play. But in relation to what you just said about like how it's a play on potential DJI ban, I'm not quite sure. They sell components for drones. Okay. So this would be a on-prem company, a POC semiconductor company that needs to sign a deal. that needs to hit news to create a catalyst to push it higher. That's where I think my understanding of the company would be. Because if they sell these components and these vision processors, that's great. It'd really just be to figure out like who's buying them and what are they buying it for, right? Like this would be super cool to see that like, oh, Tesla's looking to buy, like, people who are at the revenue aspect, the people who are closest to turning this technology into revenue are the buyers. Essentially meaning like Tesla with Robotaxi, they have DMV licenses to have auto driving, right? And they do have their semi trucks that still haven't really fully made it out. You know what I mean? Like, maybe there's something that helps them, aids them into that, or gives them some edge over Waymo, or whatever the case may be. Or maybe municipalities like to use this to try and fight crime. And then we start seeing a Palantir-esque growth out of this company, because tons of major cities are looking to have this as an omni-eye to be able to prevent crime and get an understanding of their citizens' behavioral patterns and all of the bits and pieces. But that leads me to a lot of speculation, unless I have some more insider information. But yeah, so those are all cool stuff. All right, so they want to know why Bitcoin's price follows the NASDAQ 100 price. Hey, babe, can I have some juice?
Mm-hmm.
Thank you.
That juice?
No, there's no more, but there's juice in the fridge. So, okay. Definitely need to form. Okay. Got you. You take a look then. Thank you. Appreciate you, babe. Builds vision processing SoCs. Edge AI is essential for drones. A drone must see obstacles in milliseconds. Birds, powers, yep, for sure. Cloud is too slow. Must compute on board. Okay, cool. And I'm sure this also plays into the robotics side of things too, right? Like, the Real Catalyst CEO revealed in the last earnings call, they re-entered the drone market due to heavy demand. Okay. Taking large orders on commercial drones. Okay, I can see this being something they supply the camera tech behind the Insta360. Okay. Autonomous drone tech. That's cool. Yeah. Some of this read up stuff is really cool. Would we really need to kind of see how we go about that. Like, I want to see them announce their buys, you know what I mean? Or their commercial deals. I think that would be super important. Because ultimately, we're buying companies because the perceived value of the company is going to make more money. So I'd really love to see them announce their deals. So I'd watch that to see what they're putting together. All right, so for today is good. For today's a good day. They want to know why Bitcoin's price follows the Nasdaq 100. Is it because people buy Bitcoin with their dollars, or what? I would say this. I would say that there's definitely some relation between Bitcoin and Nasdaq 100, and and it has something to do with this really cool word called liquidity. If I were to explain liquidity, it would basically be it just measures to a degree like how easily, refers to the ease on like which asset could be turned into cash or turned back, you know what I mean? So when we talk about liquidity, a lot of times there's like the liquidity from a traditional standpoint of like, oh, I got, this. Okay. I got this microphone, excuse me, and because this microphone is, wanted by society, maybe I can quickly put this on eBay and sell it for a few bucks and move on with life, right? And other items, it may be harder for me to sell this lock than it is to sell this microphone. So that means that the microphone is more liquid than the lock is. They both have values. They both have intrinsic values, right? Let's say the microphone's worth $50. The lock's also worth $50. But the microphone's more liquid because more and more people want a microphone as opposed to a lock potentially right now. So I can easily turn this into $50 and it would be a much more difficult task or ask for me to turn this into $50, right? So what happens is when people have capital or people have money they want to put to work, a lot of times they are focused on liquidity and because their clients or the individuals or even themselves, they may need that money to pay a bill soon. Or they may need that money because they're going to retire soon. Or they may, whatever the case may be that they want the money for, right? People always want to be liquid, right? But then they learn that the trade-off of being liquid is that sometimes you get higher yielding assets. You make more money, potentially by remaining illiquid in some cases, right? And I think there's a relationship as well with liquidity where, and I think the best example, most recent example as well is COVID. When we got stimulus checks and we had free frozen rent and we had, did they freeze the rent? Some people froze the rent. They froze student loan payments. People didn't have to go outside, or people didn't go outside in general. So that means they spent less in other categories. More discretionary spending was decreased potentially. In some way. 1 second. Ooh, I think my phone is dying, and that is my camera. So, yeah. What happens is when there's so much money in the system, right? When COVID came and people had so much money and they didn't know what to do with it, it finds new cracks and crevices to jump into to try to get something out of it. And what happens is it goes down the risk curve usually, right? We got our money in cash. Awesome. We got our money in bonds. Even better. Now I got a yield on top of it. It's not just being inflated away and decreasing in value. We're stepping into equities now, right? We got our S&P 500 exposure. We got our NASDAQ 100 exposure. S&P 500 is a little bit less volatile than the NASDAQ 100 simply because of the makeups of the type of companies that are within it. Then we got, after NASDAQ 100, we've got our Bitcoin, right? Our major major cryptos, the Bitcoins, the Ethereums, the Solanas, and kind of beyond that, we step into the alts, the XRPs, the space coins, the Avalanche, the AVAX, Ondo, these coins that are bringing real world assets, right? And I'm putting air quotes on it because it's still not done yet. It's all like in the makings, right? And then if you go even further down the risk curve, we got Fartcoin, right? We got Dogecoin, we got Dogecoin, the original meme coin, Shiba Inu, right? Where as we went down the curve, we went from funding the U.S. government and taxes and actual municipal things that need to get solved for and actually provide real world GDP back to you in your pocket at a 3% T-bill yield maybe, into equities. These companies build things, they sell products, they sell services, they sell things back to you as well as a consumer and provide more value, and hopefully they're free cash flowing and have EBITDA margins that actually return back to you as a shareholder, right? And that's where you get your yield from. And same thing with the S&P, same thing with the NASDAQ. And in Bitcoin has its value because it's digital gold and the potential debasement of the US dollar because they're printing so many dollars in the first place. And the printing of those dollars what actually led to the liquidity that came down the risk curve that now made people want to put 100K into Fartcoin. Excess liquidity in the market is what leads to those types of scenarios where there's so much money everywhere that people are also already placed almost everywhere in the current market along the risk curve, and for sure, and they're looking to find new places to park their money. That's pretty much it. Now, I do believe that as we go down the risk curve, right? NASDAQ steps into, like, the cup pours into another cup to pour into another cup. Then it goes, bond market, equity market, crypto market. In a downturn, in a uptick in liquidity, sorry. And then inversely, in a downtick in liquidity, it goes like that, right? Because Fartcoin's probably down 50%, 60%. I don't even know for real. I'm not even gonna look it up. Fact check me, one of y'all, somebody. From the highs, now I gotta do it. Hold on. Let me do it. Bro, the highs of Fartcoin were $1.60. It's trading at 75%, 76% discount right now. Liquidity escaped it. It's gone. Right? And now if we look at maybe Bitcoin, and we look at it from the same POV here, and then we look at NASDAQ, on the same. Let me put it in NQ. And I don't think you guys can see my screen right now, so I'll be there with you shortly. Boom. So NASDAQ topped October 25th, 2025, October 27th, 2025. We have not reached new highs since. Bitcoin topped end of September 2025. Have not seen it top since. Fartcoin topped July of 2025. Have not seen the top since, right? Because liquidity got tightened, right? And now in the inverse space, if we start to see liquidity loosen up the reins here, we get some more because the Fed cut QT. Now we're about to probably do QE. Rates are coming down to 3.5 potentially, as we read earlier this morning. This stream, we talked a bit about that. You can see that the liquidity will jump into this space here, into the equities. It will continue to see a push up. It'll make new highs well before Bitcoin makes new highs, and also well before Fartcoin potentially finds its way to try and make new highs as well. It just depends on if there's going to be enough liquidity to go through the entire system, to flow from one river into the next, into the next, into the next, in terms of the amount of free money in the markets. So I hope that answers your question. But that's pretty much it from here. I guess I should probably go over some names that I'm liking. I'm a macro guy. I guess I am. I don't know. It's hard to say what I am. There's no bucket. I just like the markets. And I like to find yield in the markets. FCX, Freeport, copper company, huge upside potential. Copper's at basically new highs day over day, and demand is not slowing down. They stopped making pennies for a reason, guys. So you may want to look into that one. I like this setup. DoorDash had an insider buy. It's looking like it's trying to do something for sure. It's not ready yet. It's still showing risk off for me, but it could be onto something soon. It could very well be onto something very soon. What else? I also do very much like Micron, right? Like the setup here. I want to say double bottom kicker, if you ask me. You know, bottom, double bottom kicker. We push into new highs. I mean, if you look through the whole sector as well, the whole memory DRAM sector, it looks primed and ready to roll. Look at this. WGC, ready to roll. SanDisk, ready to roll. Seagate, also looking ready to roll, right? Like, maybe not so much on the Seagate one, but I think it looks good nonetheless. What else? Oh, I saw a ton of flow into this name. Centennial One. They had earnings. The company fell off a map, dropped 14%, and some buyers stepped in with some huge leaps. Last time buyers stepped in with huge. Okay. Now we're back. So I talked about FCX. Same thing I just said. I'm sure you guys heard me. Maybe you just didn't see it. FCX is set up like so. I like this position. I like copper long term. And it looks great. Also am a bit of a fan. ICOP, I tried playing it. It's just so illiquid, like illiquid as ever in the options market. Like there's nobody really in the options on this name. Got to just pay equities and be patient on this one. But I mean, the breakout was back in July, so kind of missed that one for the time being. And also we saw a torch set up right here that broke out, continued. It could be something here, but I'm much rather the FCX risk reward here than ICOP, and also the liquidity that we see in FCX as well. BTU, a coal company. I saw some pretty good sweeps out of this one, and it's flagging really well. I think I played it and quickly exited. I'm trying to find it. Options flow. All right, it's not working. Never mind. I tried something, didn't work. Oh well. So what we got in BTU? I saw some people jumping into Frog. FROG. Interesting, I think. So let's chart that one up. Frog. Oh wow, torch setup. Looks nice. Technology, package software company, up 111% of the year. Hybrid end-to-end universal development, operations platform, powers, supply chains. Okay. Looks kind of cool. It's up pretty dramatically on the year. Still at negative net margins, but I mean, they got revenue. It's a real business. They're working towards it. Frog. Let's see what this looks like. Okay. Oh yeah, I mean, it's definitely a bullish trend on the longer term. I think this is a torch. You know, play the break out of the torch potentially. Saw somebody. What was the flow on this? Somebody bought the January 2026 62.5 calls at 4.6, and also staggered that up with the January 65 calls. And they paid $3.2 in premium for it. So that's something super interesting. I'm wondering, they didn't really get too high out of the money when they bought it. I mean, they bought it when Frog was at 63.30 range, 63.50. So they did have some, it was a little bit out the money. And the premium as well was not necessarily a super large amount, but I guess for a $7 billion market cap, it's a relatively sizable position, if you ask me, with the premium of 94K and another one come through at 55K. So it was a cool stagger on the more probable plan, more probable 62.5 strike call, and then the much more difficult one. But yeah, that's something super interesting. Maybe this name sees 70 by by January, and they were just positioned to try to, try to get in early and just hold through because something's coming out in this one. Got some insider selling. That's usually not good, but I don't know. Maybe something to keep an eye on. Also, S. That was what I was at before. Forgot. S got hit over the head with earnings. They're down 14%. It seems like buyers wanted to come in on the dip buy. Also in a downtrend too. Maybe I'm just not too familiar with understanding on the positioning for this. But, I mean, hey, it is near bottoms. Maybe the story only gets better from here. And they figured grabbing the $15 calls for the September 2026 was worth it. They put $1.13 million on it. And a 52-week low, I mean, this person wants to buy the bottom. I don't know. And am I going to go bottom fishing? I don't know. Bottom or the apple picking at the bottom? I don't know. I wish the chart was showing you instead of just me in the corner. Dang. Is that better? There we go. Yeah, that's better. Hey. Sorry. Yeah. So those are some names. That's pretty much all I got, guys. Hope you guys have a great week. We're stepping into week 50 here. I'm about to kick back a little bit. Plan out the rest of this week. Talk to you guys in the next one. Peace. Asian out.